Well, Sensex and Nifty still skirting all-time highs, straddling that number, as it were. We're going to invite the big man from the NBFC and the stock market space, Rashesh Shah. But before that, just an important point that Nigel is pointing out. Tata Steel and JSW Steel are leading the rally with a reason. Iron ore prices have been cut. NMDC has, this is sourced information that Nigel has for us, that it's cut prices by 5% effective today. So while NMDC itself should perhaps struggle a bit after this news is out, it's positive news for the steel makers, and you can see that they're leading the rally. But everyone is leading the rally now. NBFCs are back in the party. Banks, of course, have been leading from the front after a little bit of a hiatus, and Reliance and the HDFC twins are all up and about. It's an all-round rally. A good point to invite Rashesh Shah, Chairman and CEO of Edelweiss. Good morning, Rashesh. How does it feel now? We've got to this after a lot of caution. 3 months ago, all of us were bearish about growth. Now, how does it feel? Is this still a good time to get into the markets, or are markets toppish now?
I think it's very hard to, say whether the market is toppish or not. But I would say that the fundamentals, both in India and globally for India, are improving. I think the US pause on the Fed hike was a big catalyst. Even the underlying economy in India, we have always been saying that the NPA crisis will get cleaned up because it was almost like a time-bound thing. We are getting to the end of the NPA crisis. Last year, there was a lot of FII selling in the market, and usually the pendulum always swings to the other side. So looking at all factors, I think things augur very well. I must also say liquidity is still slightly tight, but everybody is hoping that RBI, if they cut rates and increase liquidity with the FX swaps and other tools that they are using, and once the election is over, then liquidity will also improve. I think the capital investment cycle is just starting to, the green shoots are starting to be visible. And if the global economy remains the way it is, oil price remain, stable, things start to augur well for India.
Okay. Mr. Shah, good morning. This is Sonia here. So you said that liquidity is still slightly tight. Can you throw more light on that? Will cost of money continue to remain elevated? And in terms of your own NBFC business, so what kind of credit growth would you be looking at?
So overall, I think cost of funding last quarter, Q3, was obviously very high because of all the, the crisis of confidence, the liquidity crunch, all of that. It has come off. So if the cost of funding went up at that time by 100 to 120 basis points, it has come down by about 40-50 basis points. Okay. So it's still about 80-90 basis points higher. And it's very ironic because August, inflation was higher. So from August to now, inflation has come down. RBI has cut rates, but the cost of funding has gone up. And the reason for that is liquidity. And liquidity has, many reasons. I think you all have also discussed that. The expected government borrowing in this year also is putting some pressure on the GSEC rates. The election, the currency in circulation has surprisingly been going up very sharply in the last few months. So when you add up all of that, you see that the liquidity is very tight. Still, of course, easier than what it was in Q3 because RBI has taken quite a few actions. But we are all hoping that by June, at the end of this quarter, with the rate cuts starting to take effect, with the FI money coming in, and with the liquidity infusion from RBI, the conditions on liquidity would have improved a lot, and the conditions on fundamentals are starting to improve because NPA crisis has got cleaned up. I think banks are starting to see growth again, and the economy seems to be on an uptick.
Okay. Rashesh, I'm coming to this NPAs have got cleaned up theme that you have, a phrase that you have used at least twice. But I'll come to that in just a minute. What about these slowdown things that we kept hearing? iShares, look at iShares' fall as a stock. It's fallen 50% from its highs. And the numbers yesterday were not flattering at all. They were not flattering for Hero Moto. They were not flattering for Maruti. Why are we brushing this growth slowdown under the carpet? It's not picking up, is it?
So actually, I think in a way you are right. Consumption has started to slow off, but a large part of that is also felt that there is a liquidity effect of the last quarter that has got carried forward. There is the election effect because cash in circulation has gone up. So all of that. So yes, you are right. Actually, ironically, last 3 years consumption was the driver of growth and investment cycle was not taking off. Now investment is starting to creep up a little bit, but consumption has slowed down. Our feeling is this consumption is partly temporary because of liquidity and partly all the other effects. So once you phase that out, we do feel that Q2 onwards, which is after June, the July onwards, consumption will start inching up again, and when the consumption cycle and the investment cycle both are underway, we should see growth coming back.
Okay, so July onwards, actually that's what a lot of people have told us.
Yeah, that June is the maximum they expect for slowdown.
And then come July, post-elections actually, the demand will definitely pick up. Mr. Shah, the other big news that came out yesterday was the Supreme Court striking down the RBI's Feb 12th circular on those stressed assets. What's your own view on it? How do you see recovery from stressed assets take place now? And what are the recoveries you see in your own ARC portfolio?
So, we have always believed that I think this entire NPA process, the cleanup process that I was talking earlier, has 3 steps. The first is the quantification, which I think the AQR and what RBI has done in the last few years. I think there is no doubt about how much is the stressed asset in the system. 3 years ago, even that was not clear.
Yeah.
So we have achieved that. I think the second part was restructuring and third has been recovery. Now on the restructuring part is where this, what happened in the Supreme Court yesterday comes into play, because do you want to use NCLT as the only tool for restructuring? Because different companies, different industries can be restructured in different ways, and NCLT is one very powerful tool, and we in our ARC in Edelweiss we always believed that NCLT should be used in some cases but not in all cases. I think the Supreme Court judgment yesterday restores it back to that, and that is what earlier RBI had. RBI had different schemes so that whatever can fit a particular case can be used for that, and I think that amount of flexibility you need, because NPAs are a very complex topic, and one company which becomes NPA is not the same as another company. So I think the restructuring should have a much larger play, should have a much larger toolkit, which I think will get restored now. And NCLT will be an important part of the toolkit, but NCLT cannot be the only part of the toolkit. And third would be recovery, which I think as liquidity eases off, as economy starts coming back, as the new buyers also acquire the new assets that we have seen, I think the recovery part will get easier. But the first quantification is over. We are still in the restructuring part. I think by 2020 restructuring should more or less be underway, and by 20 onwards I think recovery should start, where the banks will start getting significant amount of this NPAs coming back to them.
Really significant. I mean, the power assets are not selling. SBI was quite morose. They were hoping at least 8 of those 40 Samadhan cases will get sold. 1 has gotten sold, Rashesh. Why are you so bullish on recovery? You can be bullish that fresh NPAs may not be generated. Are you really bullish on recovery with or without NCLT?
See, again, you are very right. I think there are some accounts which have to be written off. But what I'm saying is recovery from a provisioning point of view.
Okay.
Because I think by next year, banks would have more than adequately provided.
Okay.
So what they have provided from there, they might only get back. They won't have to provide a lot more after that.
Okay. Fair enough. Let me come to the monetary policy tomorrow. What is your base case? What are you expecting?
I would say at least 25 basis point cut is absolutely required. I'm hoping for a 50 basis point cut, and I'm hoping, but I don't think it will happen, is for a 25 basis point CRR cut also, because I think a CRR cut will improve liquidity but also restore bank profitability, which is also an important part of credit growth to happen, because banks need deposit but they also need equity, and equity will come from retail earnings and profit growths. So I do hope that, I think a 25 basis point repo cut should be there. One can hope for a 50 basis point repo cut and a 25 basis point CRR cut. Though I think RBI will try to wait for one more quarter before extending the repo cut. But I think if the growth is coming back, if this quarter is a crucial quarter, maybe we can front load the cuts and infuse liquidity, and allow the the economic momentum and the animal spirits to make sure the growth is then carried forward.
Okay. The other thing I wanted to discuss with you was the loan against property business, because the last time we spoke with you, you did indicate that there is stress in the LAP portfolio. Currently, what is the contribution of LAP in the overall business? And did you raise any money recently to repay liabilities in the LAP book?
Our actually LAP book, which is loan against property, has been very stable for the last many years. I see, actually, if you look at asset quality parameters for the industry as a whole, for us, actually not got worse. There was a liquidity tightening last quarter, which created apprehension that some asset quality parameters might get impacted because of liquidity reasons. But I think thanks to what RBI did and the way the industry recovered and all, in fact, last quarter, we were able to raise quite a bit of funds. We also recently raised equity in our NBFC business from CDPQ, and the overall LAP portfolio in our book on the retail side is about 5,000 crores, and that has been fairly stable. I think the parameters, all of that, has been tracking what is expected. So actually, if you look at overall industry also, the asset quality parameters are not getting worse. There was an apprehension because of liquidity, but as liquidity eases off, I think that also starts going back on the back burner.
Okay. What about the other companies in, other NBFC and HFC companies? Are you feeling okay about the bond market, or are you just okay over the next 2 months, perhaps when people have got enough money to pay their dues, but there can be accidents thereafter?
I don't think so. I think if you look at the ALMs and all of that, I think a lot of them have got aligned. And in fact, I would expect the NBFC industry, which was growing at about 25 to 30% credit growth, I still think this year will be about 15 to 18% credit growth. We ourselves are tracking our for FY20 on a credit book growth. We are looking at a 15% to 18% kind of a credit book growth overall. So I think that opportunity is there as the liquidity eases off, and the cost of funding also. I think the customers have also accepted slightly higher cost because of this reason. But I'm hoping as inflation is coming down and RBI cuts rates, even cost of funding should come down.
What was the credit offtake in the fourth quarter in your NBFC?
I think the first quarter is just starting now, but if I look at FY19 over FY18, for fourth quarter overall, I think on the retail book, which is the only book we are growing, on the retail book we still saw about 15 to 16% growth in the Q4 also.
Okay, there has been a lot of concern about the amount of stress rising in the SME sector. Can you give us an update? How has the asset quality been in the SME portfolio for you?
Actually, even SME has been tracking fairly well. In fact, the SME sector for the whole went through a lot of stress because of demonetization and then GST and all of that. In fact, a lot of the good quality SMEs have actually last 5-6 months actually got better because they have gone through the adjustment required for GST and demonetization and all. So overall, not just for us, but for the industry as a whole, SME is tracking very well. There was an apprehension that SME who borrow against portfolio, which is a very small book for us, a large part of our MSME book is what is called business loans and working capital loans. They are all tracking well. There was an apprehension last quarter on SME against property, SME loans against property, that if property prices come down, there could be stress on that. That's, for us, has been a very small, only about 1,000 odd crore book. But overall, even in that, what we are seeing in the industry, there is not a lot of concern that is coming up on that. So overall, I think outside of liquidity and the cost of funding, I think other things are stabilizing.
Okay. Well, Rashesh, we could go on and on. You are an expert on practically every area in the financial sector, but we are out of time on Bazaar. It was a pleasure having you with us on what's a very important day, when the Nifty has had, at least for a nonce, crossed its all-time highs the day after the striking down of an important RBI circular the day before an important monetary policy. Great to have you with us. Thank you very much. As we wrap up on Bazaar, the market is still within shouting distance of those all-time highs. And don't forget the advanced declines. I mean, the Nifty Bank and the mid-caps have done so well that you still have advanced declines, 2 in the green for one in the red. So lots of trading ideas on Chartbusters. Thank you very much for watching Buzz.